So we are recording this session, and this session will be made available to you. We are talking about a little bit ago. We'll probably put this on the Farmers Market website, so that makes it easy for everyone to access. At the same place, we will also put this presentation. So if you don't want to listen to the whole hour-long presentation, you can just flip through the slides. And then in addition, Pam has put together kind of a 1 or 2 page summary of this so that you have access to the basic information. So I'd like to make a couple of introductions before we get started here. First, we have our risk management specialist, Randy Jubin. And so he's going to be co-presenter with me this afternoon. We also have our acting executive director. That is Sarah Baldwin. We have with us the acting manager at Green Spring Gardens, which is Michael McDonald. We have our community horticulture program coordinator, Pam Smith. You probably know her well. We also have our 2 farmers market staff. We have Jessica Nassif, which I'm sure you've communicated with her numerous times, as well as Kylie McClatchy. I see on here we have another Green Spring staff member, Susan Egerton, who is also listening in. And if I scroll my participant list, we have our RMD of Park Services, so Resource Management Park Services Director, Cindy Walsh. So we have a great resource here of people to help answer our questions. So today we're going to talk about what the insurance requirements are, an explanation of the requirements, what's next, what are some resources, and then take your questions. So let me get started here. So I think insurance is like medicine. Nobody wants to pay for it. No one understands it, but everyone is glad to have it when it is needed. So protection from financial loss is in everyone's best interest. Not just us, but yours as well. So I think that some of this, you all know this, but I'm going to go through this so that we're all on the same page. So general liability for business and auto protects your financial assets. So if there's something horrible that's happened, it's going to be expensive to fix it. You have insurance to help you with those financial costs. The additional insured protects those with whom you do business. So that's very common in the insurance industry. And then our job as public servants is to protect the assets of the county. So we need to be sure that the things that we do are going to have the county in the best financial light, as well as safety for its employees. Your job is to protect the assets of your company or business. And that's why you have safety procedures for your staff, and you also have insurance to protect you from liability. So over the past year, you have noticed that the insurance requirements have changed. So what happened? And that's a question that we've heard a lot. So first off, I want you to know that official county documents, and insurance requirements is one of those, are reviewed regularly. Some of them are reviewed annually, some of them are every few years, and this is one of those requirements that has been a couple of years in needing to be reviewed. Who guides that review? Who's responsible for that? Number 1, it's the County Risk Management Office. Then with his office is the Office of the County Attorney, as well as the business partners with other county agencies. So as a business partner, they work with the Park Authority. They also work with like Neighborhood and Community Services. They're working with the finance branch. So all of these different agencies within the county, they also have people who need to look after the insurance requirements and make sure that everything is above board. So when they reviewed the requirements that we were asking of the farmers markets, they identified that the liability limits that we were requesting that you have were too low for county standards. The language in the additional insured box was inadequate to protect the county, And they also recognized that some documentation of vehicle coverage was needed. So let's take a look at what the 2021 insurance requirements are. First, you need to provide a certificate of insurance. That's that one-page cover sheet that outlines your basic liability coverage as well as the additional insured. So it'll list what you have for general liability. It will talk about your vehicle liability insurance. So the general liability minimum coverage is $1 million per occurrence per aggregate. It also identifies what the vehicle requirements are. We'll talk about that in another slide. We'll talk about the additional insured updated text, as well as identify what goes in that certificate holder box. Okay, so let's look at the vehicle insurance requirements. So one of the things we want you to know, and this is a case where we also are concerned about what you have, is that you need to be sure you understand as vendors, and maybe you already know this, that all owned, non-owned, borrowed, leased, or rented vehicles operated by you should be covered by your insurance. So if you are a small vendor, and we have some of those, they're just maybe starting out in the markets or new to the markets, new for business, and they have a personal vehicle that they're using, you need to make sure that your insurer knows you're using this for business in case there is any kinds of issues. So we have here our outline of the insurance requirement that you have. So if you're using a light duty vehicle, something under 6,000 pounds, that requirement is to have $100,000 liability coverage. Sort of a medium duty vehicle, 6,000 to 8,500 pounds, that's $500,000. A light heavy duty vehicle up to 26,000 pounds would be $750,000, $750,000. And a heavy duty vehicle, I don't think any of you are bringing these kinds of vehicles to the market. That would be a huge vehicle in our market, would be those that are over 26,000 pounds. And that you would need $1 million coverage. So Randy, please be sure to speak up if there is a detail about this insurance that I am missing, since you are our insurance expert and I'm mostly just the talker here.
No problem. I just want to clarify. I am not a car guy, so I can't tell you exactly how much every vehicle in the world weighs, but I'll tell you your light duty is most of your passenger vehicles. Your medium duty are your full-size SUVs and your larger SUVs. Your light heavy duty are more of your panel trucks and delivery type trucks. Anything up from probably what you see UPS delivering in until some of your small double axle backed wheel over the road. And then, of course, your tractor trailers are over 26,000 pounds. So I think most people are going to fall into that light or medium duty vehicle. And most of the certificates I've seen, they already have coverage limits very similar to what we've outlined.
Okay, great. Thank you, Randy. So next, I want to look at the additional insured text. And so rather than read this entire block, I'm going to go through each of the sections individually. Okay, the additional insured text has 4 components. The first component is the entities and the people who are covered by that text, whether the insurance is primary and non-contributory, about cancellation policy, and then waiver of subrogation. So let's go through each of those individually. Okay, first, who is covered? That's the who. So some people say, why so many? Well, the Park Authority is a separate legal entity as an authority from the County of Fairfax. Although we share, like the human resources, financial management branches, a lot of functions from the main county that the Park Authority also participates in. Then Park Authority and, I'm not sure why I'm getting my own feedback here. But anyway, the Park Authority and the county individually have separate financial resources, and they also have functions carried out by people. And the people are the officers, the employees, the volunteers, and each of those individuals could be sued individually, even as representatives of the organization. So by listing both the organizations and the people, then we can be insured or assured that everyone is covered. So we wouldn't want to have, let's say, our farmers market volunteers who we greatly appreciate. There are some out there who have been with us for 25 and 30 years, for them to be sued individually if there is an issue at the market. So they would be covered by this additionally insured line. Next, insurance provided as primary and non-contributory with respect to the liability policies as required by written contract. Huge mouthful. So what does it mean? Primary means the vendor's insurance responds first to that liability claim. Non-contributory means the additional insured doesn't pay for or contribute to the claim. And then as required by written contract, that is the contract that you sign in farm spread that says you agree to our policies to participate in the market. Why are these needed? These are needed to show who pays first and who isn't responsible for paying claims. This avoids the county having to go after a vendor for part of a claim that would otherwise not be covered by the vendor's insurance. So I don't know if there is anything that you would like to add to that, Randy.
I just want to clarify. I got a question in the chat, and the county does. I think there's a question between qualified immunity and sovereign immunity. They're two completely separate theories under the law. The county has sovereign immunity. However, if an individual vendor is named in a claim, the county is also going to be sued. We are not going to answer and respond to the vendor, nor can the county be involved in that claim when they're the ones who are the party at fault. So therefore, our insurance would not cover the vendor, and our insurance should not respond. So it is the vendor's insurance, and these requirements make sure that it's the vendor's insurance that replies to the claim.
Okay, thank you.
And just to clarify, if the county's insurance responded to every single claim that they were named in, the cost of risk management and insurance would be completely outrageous and do an undue burden to the citizen, because, we get our money from tax resources. And essentially, the person who's responsible for the accident or the risk is the one who should be paying for the legal defense and potentially any awards of that claim.
Sounds good. So Randy, we do have a question also about rental trucks. Do you want to wait till the end, or shall we address these as they come in?
Let me read the question real quick.
Okay. Because I'm happy to hold these questions till the end, and then we can sort of answer them all at once.
Yeah, rental trucks, a rental truck is an owned, borrowed, or hired experience. So essentially, if you have a personal auto policy and you have it only for your vehicle and you don't have borrowed and hired, you might not have insurance for that rental truck. And that's why when we ask for the proof of the insurance, we say owned, borrowed, and hired, because it protects that vehicle that you rent. Or let's say in the morning of, the farmer's market, your truck breaks down and you borrow your neighbor's. We want to make sure that it's covered, and that insurance will cover the borrowed and hired.
Okay, good. And so it says, which part of this wording makes it so that the county would not have to respond?
So the primary means who responds first, like we've indicated. So when we say that the other or the vendor's coverage is primary, that means their insurance responds first. Non-contributory means we don't pay on an equal basis. Okay? So what the primary and non-contributory language literally means is, as an additional insured, the vendor's policy covers the county.
And so this would be for an issue where the vendor is at fault. So we have some situations where a customer might trip over a curb. So that's not the vendor's fault if the customer trips over a curb. So this means to when it's something that the vendor has contributed to the issue.
It's when the vendor is named and the liability or the potential nature of the claim rises out of what that vendor is doing. If it's something that clearly has nothing to do with the vendor, that the vendor is not engaged in, then we wouldn't have the vendor's insurance responding to that type of claim. Let's say, for example, we made a decision not to close the market when there was lightning in the imminent area. Well, no individual vendor is responsible for that decision. That is a county decision, and the county's insurance would respond to that claim, as opposed to a vendor produces a food product and someone gets a foodborne illness from that food product. When they file litigation, they're going to name the vendor, and they will probably name the county as the owner of the fare. In that case, we would tender or give the claim to the vendor's insurance company, and they would be the ones who actually represented us, ultimately getting us out of the litigation because we didn't produce the product. But that's how it works on a very simple basis.
Okay. So I think that Mary, who's a guest, has a comment as opposed to a question. So we rented a Penske truck and opted to buy their insurance because Farm Bureau would not add them as additional insured. So I guess that's something that she would have to discuss with her insurance agent and Penske. Is that correct?
Yeah, that would be a one-off. It sounds like something that would actually work. And if you're constantly borrowing trucks from Penske, probably for $50 a day, you really need to talk to your own insurance agent to see if paying an additional premium for that, as opposed to paying Penske direct. So that's a very particular claims issue, coverage issue, that it's really hard to give you a general answer to, but your insurance agent or broker should be helping you make that decision. Now, I will say, if your panel truck breaks down that morning and you are using the Penske truck as a temporary substitute for your own vehicle insurance should automatically cover that truck as a temporary substitute for your truck. Or if your truck's in the shop, and so that's how that works with the borrowed and hired.
So I'm going to hold Alamode's question until we get to the end about being a first-time vendor. And so maybe some of the information that we provide here toward the end, that'll be more appropriate to answer. Okay, so I'm going to move on to the next section. Is the certificate holder will receive 30 days notice of cancellation, except for any reason except non-payment of premium. So the certificate holder is Green Spring Gardens, and you'll write that or have your agent put that in the certificate holder box, as well as the address for Green Spring Gardens. So keep in mind that we aren't always alerted when policies expire, and you're responsible for knowing and making sure that your certificate of insurance indicates a active insurance policy, and that is on file with us through FarmSpread. So why do we need this language? One is to help us trust you that we know that you want to be sure that you are protected, but we'll verify that. So this is a good case of trust but verify. This is also a case of our staff, the county staff, doing their due diligence to protect the county's assets. And so that's why we need to know that you indeed have active and valid insurance. Okay, so Teresa Black's question, I think we'll hold that one to the end as well, and have that as discussion. Okay, waiver of subrogation applies as per policy language. So this one I think is probably the one that for me has taken me a while to wrap my head around. So waiver of subrogation means the vendor's insurance company cannot ask the county to pay the insurance back for any claims that it paid on behalf of the vendor. In simple terms, what this means is your insurance company can't sue my insurance company to recover its claims payments. And then
let me give I was going to give an example of that.
Please do.
We see this a lot where the vendor may have employees and an employee may become injured while on the property. Well, they're going to have a workers' compensation claim, and the workers' compensation carrier is going to pay for that claim, and they're going to try and then subrogate or come against the county for the medical bills for that employee. And that's what the waiver of subrogation means. It could also mean that if one vendor causes damage to another vendor, and instead of going after the other vendor, they decide to go after the county for the damage. Well, we have a waiver of subrogation, so the vendor can't come after the county. They could always try and go after the other vendor, but we would not get involved in that.
And then, so what does that language as per policy mean? So basically, you can look at your certificate of insurance as the insurance card that you carry in your wallet for your vehicle. It doesn't explain all the details that you have for your insurance policy. It just gives you the basic, how much is coverage, who your agent is, how to get in touch with people. So that's the same thing as our certificate of insurance. There's plenty more details that go with your insurance policy that are not covered on the certificate of insurance. And that's what this particular language means. Okay, so let me move on. So how many certificates of insurance do you need? That COI, if I've been tossing out an acronym that you weren't sure what that meant. COI is Certificate of Insurance. And this is a standard form that all insurance companies use, or maybe the majority of insurance companies use. So you will need just one certificate of insurance if your insurance agent handles both your business general liability and your auto insurance and an umbrella, if that's what you happen to have. So if you have all of that through one insurance agent, all you need is one certificate of insurance. You need to have two certificates of insurance on file with us if you have one agent that handles your general liability and one agent that does your vehicles. So we have probably both situations are common with us. Some of you work with one agent, some of you work with two different agents because your business requires a type of insurance that maybe your automobile cover or insured does not handle. The additional insured language must appear on all COIs that you submit to us. So whether it's the one or the two for your general liability and your automobile. Is there anything else we need to add to this, Randy?
I think that's generally it. I actually found out that 90% of all insurance policies in the country, and including small and middle-sized companies, have coverage limits of $1 million. It's really the standard. Rarely you're going to have one that is going to have, and you see this a little bit more in auto, where you might have $100,000 worth of insurance coverage on the auto, and then you have an umbrella or excess policy. And the umbrella or excess policy is usually written by the same agent who handles either your auto or your general liability. So in those rare cases when you have 3 different companies, 1 auto, 1 liability, and 1 excess, then we're going to need 3, but that's a very rare exception. And if you have that, I suggest you contact us and we can kind of help you out on that. If you have $1 million on your general liability, and then you have a $5 million umbrella policy somewhere else, we're really not asking for that information of that excess policy unless it's under the primary limit that we're looking for, the $1 million.
So speaking of that primary limit, that's our next slide as well. And so this $1 million per occurrence in aggregate, this is a standard requirement for all county contracts. So it's not just us picking on farmers markets. This is everyone that does business with the county. And so these limits, according to work that Randy has done, are an insurance industry best practice. And then for the minimums that are needed for your vehicle insurance, you can refer to that table, and then we'll be providing that to you as well. And I think it's on the information that we have sent out to the vendors. So when you have these higher limits, that protects your personal assets. I mean, your business is tough enough as it is. So being able to protect the assets of your business that you work very hard for is important. So the research that Randy had done, he found that this should not significantly increase the cost of the premium. So I don't know, Randy, do you want to talk a little bit about some of the agents that you've spoken with recently?
It was kind of interesting because when I spoke to a lot of the agents, none of them would actually even recommend a $200,000 policy limit for a small business or a farmer's market. So it was very difficult to even get quotes. So I did an analysis in the other direction. And when we looked at the cost of $1 million policy for a small business, the cost was $275. Using the same information, increasing the limits from $1 million to $2 million, the premium only went up $25. Now, for some people, I admit $25 might be significant. So I don't want to underestimate how tight the dollar is when you're running your business. But, you know, it's not like I'm increasing coverage 5 times. So my premium is going to also increase 5 times. It's usually less for the higher limits as you go up because there's not a lot of individual claims that go up over the limit. However, what you often see is the aggregate or the total claims either from one event or all events in a given year are the reasons for the higher occurrence and aggregate limit. So that's why we do that. So like I said, 25%, you know, we've seen something where it should be less than a percentage increase as you go up. And that all depends on your operations risk and, of course, loss record and other effects in the underwriting file.
Okay. Thank you, Randy. So Randy and my team here, we've had a number of conversations about farmers markets and insurance and the experience that Randy has in the insurance industry. So these are some of the things that he has been doing behind the scenes on our behalf, that he has been reviewing the language and has found that the best practice within the industry when requesting additional insured status on the coverage. So he discussed this requirement with several different companies with agents, and at least in his research, the majority could provide it. But I think that he could tell us more here in just a moment. He could tell us about his conversation with Virginia Farm Bureau, and that, as he has said, that most providers offered it at a lower cost or low monthly fee. And this is only required by us for the months that you're in the market. I realize that you could probably get a discount by doing something for only a year, but if that made a difference to you, that this is only a requirement for when you're with us. So Randy, can you tell us some more about your conversations?
Sure. I'm actually going to respond to one of the questions. One of our vendors said that they were asked an additional $350 extra a year to add the additional insured and the waiver of subrogation language. I'm not sure what their full policy premium is, so I'm not sure what percentage that represents, but I actually talked to another broker with regards to that because I thought the $350 a year was excessive. And I was told, or the broker advised me, that they were going to change that. There's another endorsement you can get on your policy, which is called the blanket additional insured endorsement. And this way, instead of paying X number of dollars for every single additional insured, let's say you go to 3, 4, 10 farmer markets a year where they're asking the same requirements, this blanket additional insured agreement will help reduce that cost. Really, the cost for the additional insured language and the waiver of subrogation for a medium-sized company with about a $5,000 premium should be under $50. So really, you should talk with your brokers and agents and see what they can do for you. Because, we want to make sure at the end of the day, some people don't understand these requirements. And, we want to make sure that they're taking care of you, understanding it, and giving you the coverage required at the least cost. One of the other efforts we did is we had a number of conversations. I had a number of conversations with the VA Farm Bureau, advising them of the language and why it was required and how not having it would play out in a claim scenario. Where potentially, if we had a vendor who had a claim and their insurance company paid that claim, and then the insurance company came back to us and said, well, we don't have the primary non-contributory language, so Fairfax County, you owe us 50% of this claim, we would actually need to go back to that vendor to cover that portion of the claim because, we can't indemnify them and they're the one that caused the loss, and you can actually have an uninsured claim. When we explain the scenario like that, I assume that an underwriter made a determination that it was in their best interest because we began getting VA Farm Bureau certificates with the required language.
Okay. Let me move on to the next slide here. So helping the vendors meet the requirements, there is a little bit that we can do to help you with these requirements. One, we're going to delay the due date to meet all of the insurance requirements to be in the market to June 23, 2020. That's about 10 weeks of time for you to explore this additional language with your insurance agents. What we need you to do now is that we need at minimum the certificate of insurance on file with the minimum liability and the minimal additional insured language. And so this sentence here that's in italics is what we have used for the past several years in the markets. So what this means is that the markets, some are opening during the month of April. All of the markets will be open by the first week in May. That to be a vendor in our markets, you have to have your basic certificate of insurance on file through FarmSpread and to have paid your basic fees. So other things we're doing is we're looking at researching various means of funding or grant support that could help you out perhaps in other ways. And also, Randy is willing to continue to work with you to help you understand the issues.
To that point, I want to answer another question, and I think we covered it last time. I would love to give you the name of some of the better brokers, not only that I've dealt with in my own career, but I've seen the way they handled other vendors, and they've responded, and they've been very helpful. I would love to give you those names. Unfortunately, I am not allowed. That would be considered a recommendation by the county. It seems that a number of the vendors here are insured with Farm Bureau, and Farm Bureau has been very easy to talk to. They have taken my calls. they have listened, they provide pretty good coverage, and they now have changed their language. So I'm not recommending them. I'm telling you what has happened. I will tell you, unfortunately, some of the large personal auto carriers have been less obliged to make changes. And you might want to talk to them because, you know, under the personal auto policy, there is a restriction on business use. And I would hate for someone to be using their their home vehicle, running around, engaged in making deliveries and being at the farmer's market and have a claim, only to have your personal auto carrier say, well, that was business use and you're not covered. So that's why I really suggest you talk with your underwriter, your insurance company, your brokers, and your agents to make sure you have the proper coverage, because the only thing worse than a claim is a claim that is not covered.
Great, thank you. So sort of completing this requirement by June 23. So as Randy has just said, we cannot recommend or name insurance providers. However, there may be some of your farmers market colleagues who are willing to share with you who they have used for their insurance. And so if you don't wish to put a contact information in the chat for someone, you can work with the farmers market coordinators, Jessica and Kylie, to obtain information and share information. So let's say you are willing to share your insurance experience. You can tell Jessica or Kylie, yes, you may give out my phone number or you may give out my email. So we want to be sure that we're not asking you to put your email or your personal phone numbers in the chat unless that is something that you want to do. But we're willing to help facilitate that conversation by giving out emails or phone numbers with your permission. So we have done a little bit of searching on farmers market insurance, small business insurance. So a web search on that should reveal a source of companies for you to begin to explore if your current agent is unable to meet the requirement. So we have several vendors who have submitted their certificates of insurance with the proper language. And as Randy has been explaining, he has spoken with companies that are able to meet this requirement.
And Mary, I want to add, in the conversations I've had with some of the brokers and agents, some of them have been very entrepreneurial, and they understand that other vendors are having an issue. However, don't blame me if you have an insurance agent giving you an information or a business card because they just happen to stop by one of the farmer markets to see that you need assistance. So some may be reaching out to you, even though I did not advise them or solicit them to do that. They just kind of know that this is an issue some people are having.
Okay, thank you, Mary. She has done some research herself, and she's willing to share her ideas with you. Her email is in the chat. So moving on to my next slide. Okay, what are some resources? And I'll have slides for each of these things. We'll have the sample language uploaded to FarmSpread, sample COIs uploaded there as well. There's a great publication from Virginia Tech Cooperative Extension, as well as some grants for small business. So let's take a look at some of this. Okay, these are really tiny things. This is just to remind you that what these documents look like. You know, our lovely tomato in the upper left corner. This tells you the insurance minimums that you need. In the middle of this, it's those vehicle descriptions as well as the minimum amounts there, the coverage requirement. There's the additional insured language, and there's the certificate holder language, as well as contacts for Pam and for Randy. Then this Accord document on the right is a pretty standard document that insurance companies use to provide the certificate of liability insurance. So this is like your insurance card. This happens to be one that we received from a vendor that we have blocked out the identifying information. This particular COI, you can see in, I don't know if my pointer is showing it, in this one box is the general liability. The next box is their vehicle coverage. So this particular vendor has used one agent to provide both of his insurance requirements. I read this particular publication. We've got the link in the presentation, and then Pam is putting together this one-page handout for you that will have a link to this, Managing Liability. It talks about agritourism, which I don't know if any of the people on the call here have farms that are doing agritourism. I thought it had some great information there, as well as direct marketing operations, which is, do you have a farm stand at your property? Are you bringing your goods to our farmers market? Very easy read. It wasn't terribly long. I sat down one evening and went through it, and I found it very informative for me. Then we have some grant opportunities. So one is the Fairfax RISE grant, and I think I saw that Karen Morgan has joined the call. Karen, are you on the call with us?
Yep, I'm on the call.
Karen, you want to talk about this a little bit?
About the grant opportunities?
Yes.
I'm not familiar with all of them.
No, I mean just the one that the Fairfax RISE. You had mentioned that to me, that you were familiar.
Mary, Kathy Muse is speaking to the RISE.
Oh, I'm so sorry. I'm so sorry, Karen. Thank you, Sarah.
Okay.
Sure.
Oops, I got my C's mixed up. So is Kathy with us?
I am here.
Oh, thank you, Kathy. Your turn.
So the county was able, through the receipt of funds from the CARES Act, to provide grants to small businesses and nonprofits, and grants and loans. So we did a series of loans as well as a series of sustainability grants. And the county is looking to do another set, I call it RISE 2.0, with funds that will, both appropriated funds from the general fund and also funds from the ARP, the American Recovery Plan. Because the rules around the use of ARP funds have not been completely proliferated yet, we have not been able to finalize the grant opportunities. But please continue to watch the Office of Economic Initiatives website via the county website, and you will be able to find information about that grant opportunity when it is about to be released. I've also done a little bit of research in preparation for this meeting and found that there are some other opportunities out there. I'm not sure how much funding is available, but I will provide these to Mary, who can get them out with the follow-up information that they're going to make available to you all. There's the Virginia Tourism Corporation, the Small Business Development Center of Virginia, the SBA Economic Disaster Loan, which I'm sure you're already familiar with, and then the Small Business Supplier Diversity Virginia.com has COVID resources and also links to other smaller loan programs in different regions of the Commonwealth. I went to the West Virginia site. Mary thought there might be some folks from West Virginia or other jurisdictions outside of Virginia. I went to the West Virginia site to see what kind of programs they have, and I was unable to find anything that's specific for producers, but there are loads of small business loan opportunities from the westvirginia.gov. Just click on COVID-19 resource information, and there's all kinds of information. Like I said, I'll provide these links so that they can be distributed after the meeting.
Great, Kathy, thank you. And then another opportunity that my boss Cindy found was this Virginia 30-day fund. And so this is another opportunity for you to apply for a grant for, I think I saw it was like maybe up to $3,000. And so this is if you want to call it a benefactor in Virginia, who felt that it was important for them to use some of their financial resources to help other small businesses. So these are only a couple of things that we think might be able to help you. And so we thought that that if we can't give you everything that you want. At least we can perhaps help find ways that you can ease some of your financial burden. So here's a good time for questions. That's all of the information that I have. And then let me just do one slide and I'll come back for this, that we have contact information for the insurance. You can always give Randy a call. He suggested, not a call, an email. He suggested to email him so that he can look at what your question is, your issue, and then be prepared to either email or to give you a call if it's something he needs help with. And then for everything else, Jessica and Kylie are great, but they're not insurance people. But if you have other questions about fees, about markets, things going on in the markets, the two of them will be happy to help you out. So were there any questions here, Pam, as you were following along in the chat that we have not answered yet?
Mary, I picked up two questions we haven't answered. One is a claim-related question. And I'll read, quote, so in the event that it's a very windy day and the farmer's market isn't closed, the vendor has the required amount of weight on their tent, but their tent flies away and hurts someone. Does the non-contributory mean that the county wouldn't have to pay part of the claim even though they contributed? Well, you know, it's a very technical claims question. I don't see how the county contributed to that particular claim because we don't produce the wind nor the tent. But in a case like this, we would tender or give this entire claim to the vendor's insurance company. Most likely, neither the vendor nor the county would be found at fault for that claim, but the insurance company would pay those legal fees. There's also a question from, I believe it was Mark, regarding commercial auto coverage and his employees. And although I answered this in the chat, this is a very common misperception with regards to auto coverage. If you're an employer and you have your employees driving their car, and if the accident is big enough and they do not have enough insurance, the person who is injured will come after the employer and the employer's insurance company, because that employee wasn't your agent. You're responsible for their driving, and you might have an exposure on your auto insurance after the employee's coverage limits are exhausted. If you do not specifically have other vehicles covered under your commercial auto, you may have an uninsured claim. So I highly suggest you talk to your brokers and agents and get advice on this, because once again, this is a classic scenario that we see all the time, especially with small business owners, that they don't realize the liability they have for their employees driving on their behalf. And it could be expensive, but once again, it's cheaper than having an uninsured claim. So I advise you to talk to your brokers and agents with regard to that coverage.
So while you're reading that next question, Randy, I'm going to address Teresa's comment about not closing the market. So our markets are rain or shine. And so when we know that there is going to be, let's say, hurricanes, as we get later in the season, hurricanes are always something that we're on the watch for, that if we feel that the market will be unsafe because of the winds of a hurricane, then we will contact vendors and close the markets in advance. So if there is a situation where coming up on the day of the market that there might be some afternoon thunderstorms, but you think that it's going to be unsafe for you to be in the market, then you should be in contact with the market managers to let them know that you are not coming, that you are making this decision for your own business. And so then to be sure that we have a heads up that you will not be at the market. But it is definitely the vendor's responsibilities to look out for their safety in the markets.
And that is a very fact-based question too. So there's just a lot into that. Mary also gave a suggestion of the non-owned and rented GL auto policy that her agent recommended. Well, the GL auto policy is actually called a business owner policy or a farm owner policy, where you can actually get your general liability and your non-owned auto all on the same coverage form, and that will save you money. So yes, that is a very good suggestion.
So do we have any other questions in the chat? Pam, did you see anything that we haven't addressed?
No, I don't believe so. I think we've covered everything.
Okay, sounds good. Well, those of you who have attended today, all of our vendors, thank you very much for participating in the session. For my colleagues, I appreciate you taking the time in the afternoon to address this important issue with our vendors. As I said, that we have recorded the session, that once we end the session, then I will process that recording and send it over to Pam, who will work with our webmaster to get that uploaded onto the website. So this presentation will also be loaded there, as well as kind of a 1, maybe 2-page summary of what we have talked about as a handout that Pam is putting together. So if there are no further questions or comments, thank you all very much. I look forward to seeing you in the markets this season.
Okay.